Good afternoon traders, it's Simon at Kairos Capital Markets with the weekly review of Aussie dollar, pound yen and euro dollar. So last week we highlighted on the DXY that 95.5 is the key level, and as you can see it never broke 95 at all and just rejected it completely. It also broke down the daily 50 quite nicely and this downward upward sloping trend line. Now I'm not fully convinced it will carry on being bearish just yet, just because we've got this little mini double bottom pattern here forming, which when we pop over to the DXY on the, let's do the 4-hour chart, just so you can see what's happened there. You can see, although it's a tale of two halves again, you can see like this again on the 4-hour chart, 95.5 being key. It did test it again on Monday, but broke down nicely, broke the upward sloping trend line pretty nicely as well, and put a lower high in here, rejecting the 4-hour 50 and kind of rejecting this upward sloping trend line. Now the 4-hour 50 has been a bit of a mess very recently, so I'm not going to put too much emphasis on this, but if I just then put another line in for you at 95, you can see here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, now 11th one there. So we get a rejection on 95. That would give me a bearish perspective of the dollar itself in general. It also coincide with my monthly perspective where the dollar needs to pull back a little bit. So yeah, that's what I'm looking for there, and I would most likely take some trades off of this level if I can put that into other trade ideas now. So Aussie dollar's not a trade I like. I know last week I highlighted a move off of 0.72. I just don't like this chart. If you look here, lots of mess breakdown, a bit of mess breakdown. For me and my style, that's not the most, that's just not good for me at all. This is not good for my strategy. Even on the weekly perspective, you can see lots of wicks breakdown, lots of wicks breakdown, inside bar. I don't like that. It's not my style of trading. But what I will show you guys though is just a little glimmer here. We did say a move up to 72 would be correct. There's your 72 retest there, no problem, but in doing so, that's kind of putting in an inverse head and shoulder pattern here. So we can just do this, like that, and there you are. So you can definitely say there could be something coming there, and like I said, 4-hour MACD divergence is quite huge. So we got the low, this high here, this low here, sorry, this low and this low are now three highers on the three higher lows on the MACD. So it does suggest to me that we are looking for some bullish presence to come into the market. Doesn't mean it will always, but this isn't a pair I like no more. I've really come off this trade now for the moment, and I'll skip this and look for a different pair. Now, euro dollar last week, I did say a few things about this. One thing I did say was this bearish engulfing candle for the day, I didn't like. It wasn't convincing for me. And what happened was we got 4 days of bullish pressure afterwards. So it's very strange how you can always work out a bearish engulfing candle could actually result to 4 days of bullish movements. But again, you'll grab that with experience. So the problem we've got now here, the daily has put in, one is a bearish engulfing candle, another bear trap, very similar to the other trap here, and secondly you do actually have this mini double top pattern, which again you can see on the lower time frames. So what I've done here is this: I highlighted last week a move from here to either go up and break down or to come down and move back up, put trade into the circles. Now what's happened here really now is we've got some decent, a breakout to the upside, which is quite nice. It did put this double top pattern in though, and I can clearly put in a 1.172 area, that area there. We can zoom out, we can say it's been respected a few times as well. So this is why my concern is on the dollar at the moment. And essentially we had a break of the trend line, the 4-hour 50 EMA. We are putting higher highs, higher lows in as well, which is nice. I would have to see some bullish presence on the lower time frame for this, and with that, this is the trade idea I had. And what I'd like to see, really, in all fairness, you can have two things here. You could either have, you wait for the 1-hour 50 EMA to be broken to the upside and put down again. So there's your higher low, higher low, higher low here. Bear in mind, no 1.62 is a nice clean key level there. We can zoom out on the 1-hour chart and see how key that 1.62 162 level is. So you could effectively take a trade here if you wanted to. My only concern is really it's not being proven, so you'd have to do something like this to really protect your stop. My target is at 1.199. I do believe we'll head to the 1.2 area, but that's here. However, you could wait, get a trade up here like that, and do a nice tight stop and get a much higher percentage risk to reward if it does do a break and retest of the 1 hour 50. So you got things there, or you could just take the higher risk of just putting your stop below these lows here, because when it comes into this zone here, it normally trades in it, then breaks out of it. It will then, if it trades into it again, it'll come down to the bottom. No question about that whatsoever. We can see that. But when it comes in, it normally tests it, then breaks out the other side again, as we've done here. And again, the past year, it comes in and then comes back out again, retests it, then breaks off again. So the fact that it's broken out and retested it is a good sign. So there's a half decent probability there of it winning to the upside there. So this is what I think will most likely happen. Pound yen. Now, I did say to you last week I didn't like pound yen. I had my concerns over it. I did say I'd be more shocked. Well, I wouldn't be surprised if it moved down. I'd be more surprised if it moved up. It has moved up. But if you do listen to me last week, I said I don't like it. It's messy. It's horrible. But I did highlight to you one thing, guys. I highlighted the triangle, where if it did break to the upside, it would move nicely. And as you can see there, it broke up, come down. It tested the 1 hour 50 MA and then chopped around, then moved back up again. So it's done a good move there already. It's not been too bad. Again, though, you've got a little mini double top pattern there again. You've got different charts, different time frames presenting different opportunities here. For me personally, I'm not really interested anymore this at the moment. It's just a bit messy. For me to go long, though, you can definitely say the daily 50 EMA is key. So you can see this 50 EMA always being break and retest all the time. So now we broke to the upside. If we move back down, guys, to this area here, I may be looking for a trade to go long again, but like I said, though, it's just one of these pairs where play it by ear, see what happens. I can now move this trend line like that. I can, though. And you do get the problem of if it does come down and put an inside bar there, it could also still be bearish. So it's a bit of a trap, to be quite honest, this pair. I don't like it at all still. And I'd rather just sit out. That's the idea of being a good trader, know when to sit out. Okay, guys, any questions? Give us a shout. If not, I'll speak to you soon. Take care.